Good time to bring in Neil Howe. Neil, I wonder, because you're like this prolific speaker, always have been. Like, you speak in front of these large crowds. You know the kind of crowds that once in a while, like, where you got these, I don't know what type it is, I don't want to like categorize them, but where it would take a crowbar to get their gold and long-term bonds out of them. You know that crowd? You know, like those people?
Yeah.
What are they thinking these days? Because a lot of those people, correct me if I'm wrong, were actually change fans, Trump fans, but Trump really hasn't been bullish for the things that you need a crowbar to take away from them.
No, I agree. Look, those are the people who made up their mind 10 years ago, right? So, you know, what happens now doesn't necessarily influence them, except, you know, as you say, kind of a philosophical direction, and
Yep.
they're gonna invest accordingly. You know, it's interesting.
Like, you can't change them. It's philosophical, it's ideology, there's an ideology there.
You and I have both known people in gold who haven't changed in 30 years, right?
Right.
So, enough said about that. So this has been an amazing 2 weeks, you know, and I have people who just tell me it feels like 2 years, you know, with this new president. And it reminds me of...
Especially if you're a Democrat.
And on both sides.
Really? 2 years? Some of these guys that are Republicans are super happy about this.
Some of them are happy. Some of them are distraught. I don't know if you saw, you know, look at David Brooks in the New York Times, look at Elliot Cohen, who served under Condi Rice. They actually expect it's not even going to be a one-term president. We're going to see impeachment proceedings probably in year 2.
Yeah, plenty of doubt.
So this is what I get from these first 2 weeks. Trump is doing everything he said he would do. He's pushing the pace. The polarization is deliberate. It's not a bug, it's a feature. He's doing it by design. He's deliberately pissing the other side off. And I think there's a reason for it, actually, because it triangulates the Republicans and it forces them to get on the bus. I mean, think about it. I mean, if Trump were to be very nice and, you know, I'm going to be very deferential, I'm going to try to make everybody happy, all these Republicans would be giving him grief on every little populist side of his agenda they didn't like. But when he creates confrontation, the Republicans, who know that of the three entities, Trump, the Democrats, and them, they're the least popular.
Yeah.
They cannot stand alone. So they've got to jump on the bus. You either get on the steamroller or you get steamrolled, right? That's what's going on right here. So he's pushing the pace, he's creating confrontation, he's making, and look at what they're doing now. They're going to go nuclear. And think about it. When they go nuclear, for that, you remember, it's what I call the broken window theory of revolution. After you break one window, it's so much easier to break all the others, right? So when they...
You mean going nuclear on SCOTUS?
Yeah, they go nuclear on SCOTUS, go nuclear, but hey, I like this going nuclear. Go nuclear and everything else. Why even, you know, ultimately, you know, you may say, well, wow, that's not going to happen. But think about it. Why even do reconciliation? There is nothing in the Constitution that says anything about the filibuster rule. Okay, that is a gentleman's agreement in the Senate. It can be overturned by 51 votes. Anything, all of these supermajorities, except the ones that are in the Constitution, you know, for instance, treaties and stuff like that. So think about it. If tempers get high enough, Trump can just get them to ram his program through. And okay, there's a reason why that matters for markets. Okay, that's what I want to get to now. And that is, I think when you look at what's happened to the dollar in the last 4 weeks, and look what's happened to long-term real rates, these are the two plays that directly are linked to the successful and speedy implementation of Trump's program. Meaning, huge fiscal stimulus, all the infrastructure, you know, tax cuts, a lot of new spending, plus the Brady tax plan and some kind of tariff, some kind of border adjustment, because those two things will result in, plus a lot of the capital-intensive deregulation, that will result for sure in two things. Even if it doesn't speed up the real economy, it will result for sure in a higher dollar and higher real rates. That's what's going to, the current account deficit's going to go up. We're going to suck in a lot of foreign capital. Dollar's going to go up. Tariffs will raise it. I've been pushing this in my sector for a while. So these two things are for sure to happen. And the fact that they are now tailing off, you see, long-term real rates. So in other words, the real play for the Trump's program being implemented, whether or not it actually does something good for the economy, is go long dollar and go short tips, right? Okay. Those haven't been good trades lately.
Yeah, for a couple weeks.
Yeah, for a few weeks. So here's what's going on.
They're the cornerstone of actually what worked for 2.5 months, 2 months.
Exactly.
And then for the last half
that is the premise of the Trump trade.
Yeah.
Okay.
Do you think he gets that? I was writing about that this morning because I also CC'd Bannon. I said, Bannon, Bannon, stop reading Zero Hedge every morning.
I'm gonna get to Bannon in a second.
Like, I mean, do you think that Trump understands that to make America great again, that you can't have a down dollar and down rates? That's what made America not great, was the QE demand-based policy. Do you think he understands it?
I think he is definitely confused.
Okay.
I mean, because here's the reason. He and the business guys who surround him see everything from a very granular micro view.
Yeah.
So for example, if you look at the last 30 years, what is every businessman I know? I remember back in the 80s, they're all like this. What did they always say would improve our current account deficit, would get us a huge surplus in exports, and just improve our competitiveness all around? A VAT. Why don't we have a VAT? Look at those Germans. Look at those French. That was back when Germans and French had their own, it was they had their own currency. But a VAT we'd have huge trade surplus if we had a VAT. Well, that's because you look at it from the businessman's perspective. My God, you give me a huge subsidy on these exports? Are you kidding? I could beat their pants. So all I'm saying is from the micro. Now, an economist looks at it, and I'm saying all economists. Marty Feldstein on the one hand, Paul Krugman, they all agree on this. A VAT does nothing, okay? And the same thing with the Brady plan. It does nothing overall, because the current account balance is determined on the capital flow side. It's not determined on the trade side.
Point.
On the trade side, how does it equilibrate when you tax imports and subsidize exports? The currency goes up.
Yep.
That's what happens. It's all adjustment on the currency side. Not only that, it's almost instantaneous. Okay, it actually occurs very quickly.
Well, even,
we have markets.
You mentioned Feldstein thinks that the currency can go up 20 to 25%.
It'll go up as much as the VAT is.
Yeah.
I mean, and we've seen that again and again in the European context. But so here's my point. What's really going on? That's what I'm going to get to what I think is really going on. What really going on, I think, is what happened in Philadelphia this last weekend, when all of the GOP, all the GOP met and they sort of talked. In particular, all the staffers talked, and I think it kind of crystallized a negative feeling about the Trump agenda, and that is what happened there. Everyone, policy wonk after policy wonk on the GOP side, headed by the Speaker of the House, basically said, everything we do is going to be budget neutral. Wow. Well, oops, what happened there, And they're adamant. Okay. Well, what happened there? And then what happened? No one really likes the Brady tax plan. Even the export lobby doesn't really like it. Whoa, well, what happened there? And then not only that, but then you've got all this crowded agenda. You've got repeal and replace. You got that mess has to be. And then you've got the Democrats practically declaring war on them and doing what they call scorched earth resistance to everything Trump proposed. Whoa. And then the GOP now says, we don't even intend to pass anything major on the fiscal side until August. Whoa. Well, if they don't even intend to, and the inevitable delays, what are we talking about all of a sudden? So this, I think, is a necessary background, both to understand what's happening in the markets and also why Trump is pushing the pace. Yeah. And that's why the polarization is deliberate. And you think I'm joking about this thing about smashing windows and maybe just getting rid of reconciliation. We are closer to that point, I think, than a lot of people realize. The two sides aren't even talking to each other. They might as well be living in two different countries, I don't know, they send themselves telegrams once a day or something like that. But it's getting kind of scary. The real question to me is whether we're going into, and I'm going to put this in your language, whether we're still going to be or going into quad 2 or quad 3, right? Kind of going into stagflation territory, right? Because in stagflation territory, you could still expect dollar weakness.
Yeah,
But
well, that
it would be
that
not
perpetuates
good
stagflation.
Yeah, exactly, and that perpetuates stagflation.
That's the non-Trump. That's effectively the Bernanke with Obama, the Bernanke with Bush policy, which is devalue, create the illusion of growth, which is some modified version of asset inflation across kind of slower growth asset classes, including REITs and commodities and stuff of that nature. And what you get is a real consumption tax, and therefore, because you got to subtract the deflator from GDP, as you know, you just get a little lower GDP number.
Well,
we have that modeled in for the first quarter. We have a negative 0.7% sequential, so not a year-over-year number. Year-over-year GDP is still running close to 2. But that will if we're right, that's what's baked into the cake in Q1, and then Q2 we get a pop again, back up to 4.2% GDP growth on a quarter-over-quarter annualized basis.
in Q2.
Yeah. So if put another way in meetings, I keep saying to clients, if you hate Trump, you're going to get what you want, and if you love Trump, you're going to get what you want. But you're going to get them at 2 different times.
Interesting.
On economic growth data. I mean, this is kind of what it is.
Let me suggest, and this is a little bit of a kind of a shading or an interpretation that I have, and that is just to wondering whether the data are as positive as people say. And let me just, one particular data point that I think is worthy of attention. That is, a lot of the positive stuff that's been coming out is sentiment or quasi-sentiment data. By sentiment data, meaning small business and consumer confidence and all that stuff.
ISM is a diffusion index.
And ISM are all, whether it's market or whether it's, whatever market or ISM or any of these, SMI, whatever they are, they're all perceptual, right? So when you get down to hard data, the main positive data here are the employment data, right? Which have been pretty good. And we've seen year over year, as of the December, we saw about year over year is running at about 1.5% growth in employment. Here's an interesting data point though, and that is the recent decline in average hours.
Right.
So when you're looking at aggregate hours, you're looking at only just barely half that now.
Well, steady decline.
Okay.
It wasn't just recent. I mean, aggregate hours
but I
went
mean
down the whole year.
Yeah, exactly. But it's been trending down. We now have 2 observation points, the last 2 months, at the lowest rate that we've seen that happened since 2010. And you look historically, and the idea of declining average hours going into a speed up, you just don't see it. I mean, I've never seen that. You would expect pressure, and we also see no real wage pressure right now. In fact, we see declining real wage growth because, of course, that huge deflation that we saw in 2015 in 2015 is kind of closing back up again. So my point is that we have no precedent for declining average hours into a speed up. I'm just pointing that out. And it may have many reasons. It may be that the data is fundamentally warped a bit by the rise in the gig economy. We've talked a lot about that on this show, and all these new platform-based sharing services and so on, and what's going on there, and also dealing with the edge of the workers who are not on the labor force, but not quite looking for jobs either.
I mean, your bailiwick, all these demographic issues and technological advances have not gone away. They won't go away under any regime politically. So, the way I see that data is actually that, by definition, wage growth is the latest of late cycle indicators within the labor base. So we did have a 5-quarter slowdown. So you're seeing a lot of, including negative productivity growth into the third. It started. All those things started to bottom though. So the question is, that's why this week's labor report is so important because actually last month on a private sector wage basis, you saw 2.9% growth, which was clean cut the only pop we've seen. That was 1 month though. That's a December number. So this January number, the question is, will you get private sector wages into the 3s? Because then we're starting to talk about some actual wage growth average hours worked, if they bounce or not, we're going to have to see. But
Right.
that's the last, like you said, you're identifying the right one because one of these things is not like the other. And if it doesn't, that's a problem. Because remember, we have the chart, I don't know if our subscribers remember, or if Josephine could show it, where it's really simple. When you look at output or GDP, and you have negative, we show exactly what Neil said. You have negative average hours worked, you have negative productivity, you have negative rate of change growth in the labor force. Those three things cannot possibly equate to accelerating output, GDP. So again, we just had productivity go positive this morning on a year-over-year basis. So that's up 1% year-over-year. And we're not, as you know, this is the lowest level of productivity since and I think the lows were like the 1980s, 1987. You have to go all the way back. The lowest level of negative numbers was like a negative 0.6% year-over-year productivity growth. Now we're up at plus 0.1, so that's a change. So I can't get on the call and say we have negative productivity growth because in rate of change terms it's accelerated. I can't say we have negative GDP growth, or I can say that we have negative non-farm payroll growth. So non-farm payroll growth and average hours are the two that you could, if they turn, that's to me, if both of those turn, Neil, I think you're going to see 3% in the 10-year bond yield, no problem. Because then Trump's going to walk out and he's going to say, see, you monkeys, you are Congress. The only thing less popular than mainstream media is Congress. So Congress, you guys are slow, you argue, you're dumb, we don't like you, and you know what? I am like you said, pushing the pace forward, and I'm the greatest creator of jobs that God ever created. I could see him saying it. All he needs is a big labor report.
Right.
And he hasn't had one yet. But he'd say that I haven't been on the job long enough yet. So we'll see. I mean, these are the kinds of things that I'm looking for as a potential change in direction, if only because a lot of the other data has changed in direction.
And we'll see whether Yellen remains dead.
Dead dove walking. And I apologize if some of you are upset that our relationship has ended, but Janet and I, we're just, it's over. I'm goodbye. You're dead to me.
Yeah.
Questions?
And then, well, too, I don't know if we have the Q4 deck handy, but on 39, we kind of show that the visual and the deceleration of NFP, hours worked, and productivity. All going down.
Slide
at the same
39,
time.
Josephine, on the
in
current macro deck.
In the Q4 deck.
Because Neil's absolutely right about all that.
Yeah. So first question here for you, Neil. What do you think is the biggest geopolitical threat right now?
Well, I'll have to say honestly, given the new administration, given who's in the White House, I think we have a lot more maybe on the table. I think the obvious ones are North Korea, Iran. That suddenly is again in the news because of that warhead testing, and China. I mean, those are the big flashpoints, and I could easily imagine kind of Trump pushing that. So here's what's interesting about Trump. Trump has a completely different leadership style, diametrically opposite than someone like Barack Obama. Barack Obama, you remember he prized himself. Everyone on Barack Obama's staff said he played the long game, right? He deliberately deferred from any immediate reaction. He was kind of rope-a-dope, He was going to wait and see if the enemy made a mistake. So he always talked about that, the long game. I'm just going to hang around here and see what my passivity I will use to my advantage. It's kind of like a Shaolin monk or something, just waiting for the others. Trump is completely different. Trump's idea is to just get in your face and just see what you do, and to press the other guy, press them, and to just see how they respond. Trump feels that he really doesn't even know the other side until when you press him, you see how he reacts. That's how Trump gets to know you.
Did you see
that's a good point.
Did you see the note that if you haven't read it, on Hedgeye.com we have one of the great contributors to Hedgeye, one of my friends, Dr. Richard Peterson. He wrote Inside the Investor's Brain, Trading on Sentiment. Guy's fantastic. I don't know if you saw it, Neil. He wrote this great thing. Is Trump crazy?
I actually, and something I'm coming out with later today, which we're going to talk about, just this.
Yeah.
I linked to his piece.
Oh, you did?
Yeah, and there was another great piece in the Wall Street Journal too. This whole business about using craziness. Game theory has a whole. There's a whole part of game theory which deals with deliberate uncertainty, actually just creating craziness, right? And the idea is that when you act crazy, people actually back off. They get worried. One leader we know, and it's often commented in this context, who deliberately and consciously used that was Richard Nixon. And Richard Nixon was famous for that. And he actually would order, nukes to be loaded on board some B-52 that was flying around, just to scare the race. I have no idea. I'm not doing anything with it. I just don't want them to be sure that I want them to think that I just might be a little bit insane.
Nuts.
And
it works.
He talked about that, and Kissinger, in his memoirs, references this often, that Richard Nixon deliberately kind of went out of his way to just suggest that he was maybe just a little nuts, and use that to your advantage. Trump clearly does. I mean, that's just his, and you never know with him, right? That makes it effective.
Well, that's the whole point.
Yeah.
This is going to be too much for subscribers, but now that I'm thinking about it, I'm laughing to myself because I'm thinking, when have I purposefully acted totally crazy, batshit crazy? And when I first moved to New York City, we're out late with the guys, and we're walking home. It's way too late, Upper East Side, and we're all kind of, inebriated, not kind of. The first guy, and we're walking in a single file. A bunch of us were walking, my buddies and I. First guy lips off to this big dude kissing this girl. The next guy kind of chirps him a little bit. I'm the third guy in line, so now I got to deal with him. This guy's huge, steroid freak. He starts freaking out on me, freaking out, what did you say? And I hadn't said anything. And this guy's way above my pay grade. Back in the 90s when you had these monster Hulk steroid freaks.
Yeah.
I think they're coming back. So my reaction was, I got to get crazy. So I just ripped off my clothes, and all of it. I went naked. I dropped my clothes. I ripped my shirt off, and I said, "You want to get nuts? Let's get it." The guy literally ran. The guy ran.
Yeah.
And I'm telling you, he was maybe 6'2" or 6'3" and weighed a good 240. I mean, he must have thought that I was on some squirrely drug, and I was clearly I wasn't packing any heat. I didn't have any clothes on, but he was scared.
That's hilarious.
And that's the only time I ever acted completely crazy, and it worked.
Right.
There you go.
Because the message is, I don't care whether you survive. I don't care whether I survive. And that's what scares the other side, right? You don't even care whether you come out of this alive.
Yeah.
Right?
Wow.
Unfortunately, this is not the kind. Now, this gets into another aspect, and that is, this could unsettle markets, needless to say, right? Particularly if all of this stuff we've seen, and this is, I think, worth thinking about. So if investors are thinking about the next 6 months, right, what are we going to see?
Yeah.
Imagine what we've just seen in 2 weeks.
Oh, boy.
And imagine how this could compound with foreign policy interactions and so on. So a lot of people would say, well, this confrontation strategy is risky. Now, I've said this before, I'll say it again. I actually don't think it's risky for Trump, and this is why. If markets go down, again, I'll just say it again, Trump would glory in a bear market in his first year in office. Yeah. He would have fun with it. He would play on it. This bear market is the feeling of corruption leaving our body, That's what he would be saying. And he would
blame Obama.
And suddenly then he would use, as it went notch down, down, and down, and down, what gains? The GOP leadership's high and dry Tory libertarianism, yes, or Steve Bannon's populist fury, right? Who wins on that exchange? With every 100 points the Dow goes down. I think it's clear. I think Trump wins. And what would happen then is that Trump could then actually create sunlight, daylight between himself and Congress, and basically say, you better really speed up your stuff now because we're in trouble. We need my package through now, and you want to stand alone now? Here's my point. Every president who has had 2 terms since 1900 has either come into office immediately after a recession, in a recession, or has had one immediately, within a few quarters of inauguration.
Wow. One that they could recover from.
Right.
So by the time their second term comes
exactly.
down, they look good.
Every one-term president has not experienced that, with one exception, and that was Harry Truman. Harry Truman did experience a recession early on, after, in 1948-49, And obviously he was only a one-term, he was an unpopular one-term, I'm talking about, after his actual election, not after his, FDR died. He was a very unpopular one-term president. He did experience an early recession, but all other one-term presidents have not experienced that. Now, this is just FYI, could be just coincidence, but if I were advising, if I were in the White House, I might bring that up. And I do think that in Trump's particular case, because he can so clearly bill himself as an outsider, he was no part of the two-party circus that brought us to this impasse, right? That would be his the way, his message.
Yeah, and the core of the circus is really mainstream media and Congress. I had this, not argument, but a very lively debate with our own political strategist, J.T. Taylor, on this. And he kept saying, well, look, what's going to happen here is, he's right. I mean, it wasn't like a debate. It was just like, I was trying to take us past the point of, yeah, obviously he's pissing off every establishment Republican and Democrat in Congress, and he could lose them, but he wants to.
Right.
He's trying to. When you have 70 to 80% of people don't like mainstream media or trust it and do not trust or like Congress, why wouldn't he make that the other side of the trade?
Totally
makes
sense.
He doesn't actually think about it the way that a normal politician would think about it. He thinks about it like, where am I most likely to win?
Right. And no, I think it's absolutely right. And the more polarized things become between Democrats, as the Democrats attack Trump and so on, the Republicans have no other choice. They've got to come to his defense, and then they've got to actually amp up the response. And they will no longer complain about Trump.
Exactly. Look at me. I don't like the guy, and I'm already defending him. Because I'm defending him against a bunch of stuff that doesn't work. The last thing I want to do is get up this morning and read a bunch of academic blowhards that are telling me how wrong this is going to be tactically and how wrong this is supposed to work philosophically. It's like, go back, strap on a fanny pack, and go back to the weenie bin and then write another paper on that. Because these are not the people that understand how to lead or dynamically adjust or deal in a mess. Like, as Teddy Roosevelt would say, these are not the men in the arena. The men in the arena are the businessmen and women and working population of this country. And I look at yesterday's SCOTUS. I mean, the appointment is explicitly pro-business. And all you had is all this rank and order of academia whining about it.
I think here's the strength of his approach, and it's absolutely right, because he really understands, he works dynamically in real time. Right? So he's solving 5 body problems in physics, which have no definite solution. There is no, you just have to intuit it, right? Which is the strength of his approach. I think the weakness is that whenever he sits back and starts thinking about, the idea that he's talking down the dollar while doing these policies that are pushing up the dollar is just incoherence. It doesn't help him. You know what I mean?
Yeah.
I mean, that just doesn't help him. And everyone's just looking around. None of this computes. But again, that has to do with the fact that his business orientation means he's micro and he doesn't understand the system.
Yeah, that's a dangerous thought.
Which I think is highly possible.
Yeah, ignorance is never just because you act crazy and you want to stir the pot doesn't mean that you're not ignorant. I mean, I get that part.
I mean, and there is a problem, with his program, and that is that if he wants a low dollar, if he really wants a low dollar and he wants U.S. exports to be more competitive, he should do everything the opposite of what he's doing, particularly on the fiscal side. We should have fiscal surpluses, even if it slows down the economy, so that would actually bring down the dollar. It would bring down the dollar. It would make us more competitive. It would actually improve our current account balance. We would be exporting then more than we're importing, so forget the tariff, forget all that stuff. Bring surpluses. Actually, avoid foreign capital inflows, so that our dollars. So that foreign dollars abroad are spent buying our exports rather than buying our financial assets.
Yeah.
Remember, the two are competing with each other.
Yeah.
So that's what he would do.
And that worked. I mean, this is the other number here on this versus this point. This negative 0.95 was the gold correlation, inverse correlation. Right. So when the dollar goes up, gold goes down, vice versa. S&P 500, since Trump's election, the 90-day correlation is plus 0.8. 80% of the up of the uptime has been on strong dollar. So this is actually, if somebody in all of his advisory hasn't told him that, I'll be pretty surprised. So he was trumping about Dow 30,000 or Dow 20,000, which made it to Dow 30,000 in Bannon shortly thereafter. There comes a point where he's got to make a call.
But remember,
does he want the stock market or not?
But remember, as we've just said, he sees a bimodal outcome distribution. He wins either way.
Yeah, exactly.
So if the market goes really down, he wins. If the market validates him, he wins. I think the one fear is, and this is why
he'll create a win out of anything.
He doesn't want to be stuck in the middle somewhere.
Yeah.
That's a bad outcome.
So you're saying over the weekend in Baltimore, like the outcome, the conclusion from the Republican side was not what he wanted to hear.
Well, I think he's taken in all this data. I'm not sure he's deliberately thinking about. He's just getting kind of this feeling or whatever, and I think he senses, and I think everyone senses that the expectation behind, or I should say, the premise behind the original Trump trade that we saw after the election is unraveling.
Yeah.
And that has consequences, as we've seen, both for the dollar and for real long-term rates.
Yeah.
And he also senses it because just as a leader, he wants his program to be through quickly. I mean, that's going to give him glory. And so, in other words, he also senses that politically what the markets are responding to in their own way.
Mm-hmm. The way you trade that, by the way, is I agree with Neil 100%. The unraveling typically feels like more of an unraveling at the low end of the range. So at the low end of the range for the US dollar is where you are now. You're at the high end of the range for gold, high end of the range for the euro, high end of the range, anything that's obviously inversely correlated, low end of the range of the Nikkei, so high end of the range for the yen. This is exactly what should happen. Again, you go to the high end of the range and the low end of the range. It's called mean reversion. So once we're at the low end of the range, my setup here is I'm buying a lot of dollars today because my best high probability bet is that you get a good jobs number that Trump trumpets as the early victory for the people. That's who he made his speech to or towards, and he says, look, early signals of what I'm doing is I'm making America great again. He defines that with jobs. So again, if that fades, I have no problem selling the dollar and coming back to it again in April or May or whenever. I mean, the point is that Neil's analysis here is very well taken because the market is signaling it. In vernacular, Hedgeye vernacular, you look at two specific durations amongst our three. You have the trade, the trend, and the tail. The trade is 3 weeks or less, the trend is 3 months or more, and the tail is over here at 3 years or less. So on a medium-term trade basis, the dollar is bearish. On a trend basis, it's still bullish. We'd have to break through 97 in the US dollar index for that to go bearish from a trend perspective. And from a long-term perspective, it's super bullish out on the tail. So this trade trend debate really summarizes, I think, a lot of what Neil's saying and a lot of what I'm looking at in terms of near-term catalysts. So it'll be a good, fair fight. If you break 97 in the US dollar index and this path Neil went down that Trump is actually glowing in a bear market, or finding that is actually the path, then you don't want to be long dollars in that situation because obviously he will perpetuate the down move.
Okay, this next one's probably is for both of you. Jim Rickards is firmly certain that in the 2008 crisis, we were hours away from complete shutdown of the monetary system. Do you think that's in fact true? And then do you see that as a probability under Trump if we have another crisis, or is he more inclined to bail out the system again? Loaded question.
I mean, I don't think that Trump is anywhere remotely close to the crisis that was Wall Street's banks and the leverage embedded therein and all the lies. Trump is just a guy. He's not Dick Fuld versus Trump. I mean, that's not even close in terms of the systemic risk that Jim Rickards was highlighting. And yes, it was the banking system, the existential reality that the banking system itself, I think that's what Rickards was saying. I'd have to go back and look at what you're looking at, but I'm pretty sure that's what he's talking about. Banks today aren't even in the area code of that path.
I would totally agree with that. There are enough white knuckle scenarios imaginable for Trump that we don't have to imagine that one.
Yeah.
Look, the rate of change in everything that has to do with the bank is positive. You have interest rates going up, dollar going up, net interest margin going up. You have earnings expansion as opposed to the earnings recession that banks had last year. Banks' leverage ratios have come down as much as they've ever come down. So the credit quality, you look at any high yield bond proxy, you look at any credit metric, spread metric, et cetera. The banks are not worried. This is another thing, Neil. everybody who's politically partisan, particularly the haters of the Trump, and I mean Republicans too, I think I agree with that, is that there's certain Republicans who just hate the guy. Everything that they say, if you go to a cocktail party and have more than one, they are just nervous. They're just totally nervous. It comes out of them. They hate him. They think it's going to end in tears. But what does the market's volatility signal do in the face of what is a very partisan nervousness? Volatility has been smashed to effectively decade lows here. So the market volatility read-through is that this guy's not volatile other than in what you think of him personally. The way that the market's pricing risk, whether it be geopolitically, financially, credit-wise, is actually hitting new lows.
Right.
Isn't that an interesting reality?
Well, this might get into Ben's territory here, but it has to do with realized versus implied. So how are people perceiving volatility? And
Exactly.
I think people are nervous because, of course, everyone begins to think when you have a regime change, all the rules are changed, and maybe they're just completely wrong about implied volatility. I think that's why people are nervous. It's like people are wrong about Trump being elected. People are, when you move
Imagine
in,
that, they're wrong again.
but when you move into a different territory where people sense we are now, people think that all of the underlying correlations have changed. They're just not reflected yet.
That's what it is. It's the longer the longer a trend stays the same, people come around to that view. When there's a phase transition or a change in the trend, trend of something, people are late to come around to it.
Mm-hmm.
Right.
So that's what's reflected.
And then they capitulate.
The longer that it happens, the more consolidation happens, and people come around to it.
It's also the epicenter of Wall Street's perceived intelligence. I mean, pretty much 100% of people who have performance issues on Wall Street at some point, and it's usually people who never had performance issues that have this intellect quotient that is magnified in their own mind. They fundamentally believe they're smarter than the market. That is point final, seen it 100,000 times from every Ivy League school that I've been around, seen, etc. So what they actually are doing after a market move like this, and throughout a market move like this, I might add, up in equities, high beta, down smashing volatility, is that they believe that they're smarter and it will come. It will come. And when it doesn't come, the thing that they hold most dear, which is never being wrong in their life, and I can assure you that most people I went to school with weren't until they went to Wall Street. They were never wrong in their life. So when there's an actual performance number to them being wrong, they will eventually capitulate. That's when implied comes down.
Yeah, I would say so. All right, let's close it out with one more for you, Neil. Related to your book, The Fourth Turning, is this perhaps the end of the fourth turning with POTUS as the gray champion?
Ooh.
Yeah, I get asked that, and I guess one.
What is the gray champion again?
The gray champion is sort of the ultimate or climactic leader of the fourth turning, around whom civic trust begins to grow again, right? Mm-hmm. So these are the pivotal figures in at times of fundamental outer world institutional political crisis, when we're kind of tearing down and rebuilding institutions. Keep in mind that in our fourth turning scenario, we're just barely, we're not even quite halfway through. We're kind of in the middle of this long era. So I think there's going to be quite a bit more to come. And Trump obviously takes us more toward the climax. I mean, everything about the guy is sort of increasing confrontation with the expectation that if it goes well, I'm good, and if I totally break it, I'm good. As we were just discussing. Yeah. And I think that kind of the outsider coming in who's willing to take on all outcomes is the kind of leader we're talking about. And I would hasten to add that the gray champion figure, when we think of the Abraham Lincolns and the FDRs and so on, and these pivotal,
Would Churchill have been a gray champion?
Oh, definitely, yeah. And they're all prophet archetypes, meaning they're all born just after the late crisis. They all belong to a generation of sort of that prophet archetype. And Trump is obviously a baby boomer if there ever was one. Just everything about the guy. The huge ego and all that. And so everything. And these are what great champions typically have. They have enormous ego, enormous self-confidence. But the one thing I say is that these leaders are made, not born. It is circumstances which push them into making the right decision. It's not because they're brilliant from the beginning. People don't forget that FDR was widely considered a lightweight, coming out of school, coming out of it with his Ivy League background. No one thought he would do much in his career. Obviously, he was born with a silver spoon in his mouth and had a lot of appointments, and he could, he'd become governor eventually. But he was not even the odds-on pick in 1932 to become the candidate. Obviously, everyone knew that Hoover was toast, and Al Smith and all the other guys thought they had first place. So I'm saying there was nothing ordained about FDR. He came in and he ran on a balanced budget, platform, and against Hoover, if you can imagine that. But he grew into it. He had qualities which allowed him, in a fourth turning, to go the only place where you could go, given the logic of what was unfolding. And the question is whether Donald Trump may be that kind of person. If he did, we would see some quite extraordinary things. For instance, gaining trust and gaining voter share. It's as hard as it may be to believe, particularly, and I've often said this, particularly if he gains that among the young. And that's completely unknowable right now. Again, to come in here, what I was saying at the very beginning, Elliott Cohen, he's a big professor at SAIS. He's one of these big high muckety-mucks of international policy, served under Condi Rice, and David Brooks, I give those two examples, believe that Trump is so horrible. There's that kind of, this is the high Whig church of kind of George Will conservatism, right? Who just absolutely detest Trump. These are the people you were talking about before.
Ivory Tower.
They expect that Trump is going to be such an absolute colossal failure that he's going to end up impeached now before the end of his first term. So I'm just saying, when the range of plausible outcomes spreads out, that is exactly what we described as being fourth turning land.
Interesting.
When it comes, and remember too, fourth turning is public history speeds up. And remember, we sort of started here about everyone said that we've had 2 weeks of Trump and it feels like 2 years.
Okay, that's what you mean by public history speeds up. Yeah, that's a good way to put it.
And this is, it reminds me of that famous quote of Vladimir Ilyich Lenin, and that is, there's some decades when nothing happens, and there's some years when decades happen. And Lenin should have known. He knew whereof he spoke. I mean, given his own personal contact with history. But I think that's the thing that when we talk about turnings, is the idea that you can have decades like the 1990s, where in public life almost nothing happened. It was just kind of celebrity circus, and it was kind of on cruise control, right? And the government sort of governed lightly, and people basically did whatever the hell they wanted to. And this is when Gen Xers are coming of age. We're in a very different era now.
Yeah,
I love that.
Oh, that's good.
For those of you who, we'll wrap there, but for those of you who have not read The Fourth Turning, like that's how I met Neil without meeting him. That's how, so many people that know Neil Howe, that is the fundamental book that changed how they looked at the world in demographic terms. So I highly recommend that. The Fourth Turning is the title.
All right, we'll wrap it up there. Thanks, Neil.
Okay, great.
Thanks to everyone who tuned in this morning. Good luck out there today, and we'll catch you back here tomorrow, same time.